Welcome to the Market Maps Premium Session. It's Wednesday, it's Wacky Wednesday, December 14th, 2016. Counting down. How are we doing? Welcome back. Welcome back everybody watching the recording. What we got going on today? We got a Fed day, huh? That's what it looks like. Things are bumping around. Yeah, it's been quiet all week. It's a good thing, right? Volatility. Good afternoon, Kyle. All right. Now, don't forget, we're going to be wrapping this up Monday and then off for Christmas vacation. So we have some stuff to get through today. And Monday, I'm going to do a session on journals again. So I thought that'd be a good way to wrap it up. So you have something to look into. You'll have plenty of work with what we're doing. You'll have plenty of work to look into over the holiday. Sort of help you reset yourself. Other than that, no admin. Let's see what we can do today. Now, what we're going to try to do today, and I know I had asked you to look at some things, but let's finish our lessons here. All right, what I'm going to try to do is finish answering, or at least most of the way answering, the original question we had about where do I place these green lines to do them consistently. So we're going to get down to that today. See that? You guys, asked me one simple question about little green lines, and it takes me what, 10, 20 hours to answer it. That's good because we want to understand where they come from. It's the language of price. We want to understand where they come from. Otherwise, it's just some sort of dead setup thing. We'll get to function. And so you asked me a simple question about this, and we're going to get to this today. I said it has to do with swings, process, and components and relativity. So we've talked about swings. We'll finish defining our bars today, and then what we'll do is we'll go into the process of them, and we'll see what these little green lines, hopefully we've started to answer some of this. And then we'll go back over and do it again. Let's see if I can find my sheet here. Let's see if we can find the sheet we're working on. Ah, there it is. Hi, John. I'm afraid to ask many questions because of that. I feel it derails the planned lesson. Well, sometimes it creates the planned lesson. See, we've been doing planned lessons now. See, I don't plan. It's tough in a group here, John, because we have people, showing up new, that people that are been here for a while, people that are see things pretty advanced, and some people that are still, moving along the curve there. So it's hard to say structure 1, 2, 3. I'm still building a course, by the way. I got notes for it. But this is all stuff we talked about, but we just keep breaking it down. And one of the good things about these questions is that as I get questions from different people, stuff that I've gone over, and they're similar in nature, but as I get questions from different people, it forces me to clarify it even more, to help get it out, and that in turn gives you another angle to look at it and maybe to grab the essence of it. So you guys keep putting me to the fire, and I have to keep clarifying and bringing things down so it's understandable. So it's all a good thing. It's all a good thing. Yeah, I don't have lessons planned for the week. I have a structure, I have a direction, but I like to work with live markets too as well. And we do some trades, and whatever happens to be happening. So it's a mix in these sessions. Maybe we'll make some sessions that are structured. I've been contemplating this. And what I'll have to do in order to do absolutely structured sessions from beginning to end is maybe do it on a 6-month basis. Say, all right, there's enrollment here, nobody else gets in, we go for 6 months. Something like that, right? We go for 6 months, boom, and it's structured, boom, 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 boom. Here, work on this for the next 2 to 3 weeks, and then we do the next one, that kind of thing. Sound good? I don't know, it's an idea. That's the only way I can absolutely structure it, is say, all right, every 6 months we'll start new, and maybe we can break them down from beginning to advanced. I don't know, something like that, Rita, right? Because I know what I do here, it lacks a certain structure, which is okay, because markets lack a certain structure. Trading lacks a certain structure. So I know it lacks it, and you have to, I'm trying to give you the language of price and how it works and all the little things that go with it. But yeah, I'm working on that, Rita. I'm trying. Gary says, no, this way is much more fun. For you, not for everybody though. Not for everybody. So, all right, let's see if we can get to our little green lines. All right, so we broke things down here. Principles, swings, components. We started to talk about swings. We defined them, major, minor, bar level. Talked a little bit about process. Now, what we're going to go in today is we're going to define some of these bars and then talk about the process of some of these components like mountains, pivots, coils. They go through a process, and that should get us to our little green lines, help, I don't know, bring things together here. And then we'll do the same thing with focusing on strategies or something. But after we get done with process, we're not completely done yet. Because guess what? After we get done with process, we need to tackle, and this will go into actually creating some strategies. So after we get done with the process of these, we'll go into relationship. And what I mean by relationship, and we're not going to have time to do that before the end of the year, but what I mean by relationship is, and so you can think about it, is okay, if I have a tail, I can relate that tail to several things. I can relate it to a coil. I can relate it to the bodies of the other bars. I could relate it to the last 3 bars. I can relate it to a wide range bar gap. So this goes into actually setting up almost rules for price action. And then I'll do relationship of outside bar to each one of these things. And then now we're getting into actually defining some context, because we can say, all right, here's a tail. I need it to be bigger than the last 3 bars, and I need it to be in clean air or at a new low. So that way it's related to a swing as well. Do you see where I'm going with that? See, it also gets a bit exponential here. But that will turn into strategy. So I'll do relationship of tail to relationship of gap to relationship of, then we can do structures, relationship of mountain to swing, and we can start building configurations and sentences. So, once we learn the alphabet, which is what we're doing now, once we learn the alphabet, now we can, begin to put the alphabet together in coherent sentences. And if you can do this at a bar level, And like the outside bars, bigger structure also. We can do it at a structure level related to like big fat 3-to-1 trades. So that's for later, but you can see where I'm going. And you can practice this on your own. If you have a gap where, let's put, if we have a tail, let's put the tail at the bottom of a swing. Or let's make sure the tail busts the coil, the last 3 bars, that kind of thing. And then see, that's a relationship, the tail to the coil. All right, so let's go into this. I'm just kind of giving you an idea where we're going. So let's close that guy up. Let's go into these components here. Now I also asked you to look at, go away here. I asked you to look at this guy. What we're going to do is going to lead into that, okay? Let's make some room. So we're going to define some bars, and then we're going to talk about process. Now, I want you to begin to get this. And so we'll just do some easy definitions. So for a tail, what I'm going to say is the open and close have to either be in the upper third or the bottom third. All right, doesn't matter where to where, but both of them have to be upper third to bottom third. And this is a starting out point for our definitions. I'm trying to just bulk it out. Does that make sense? Upper third, and if the tail's the other way, then it's, they both have to be in the bottom third. Okay? All right, so that's a tail. Next, let's do this in process here. I'm going to have hard up. Okay? We're going to have hard up here. How can we define it? So we can, begin to recognize it. How can we define it? Open in the low, close in the high. Yeah, but okay, we got to get a little tighter. Open where in the low, right? See, we got to get a little tighter than that. Yeah, or reverse. We're not there, Gina. Yeah, that's good though. How about we use the same definitions here? For a bar that's hard up, we can say it must open in the bottom third and close in the top third. How's that? Make sense? That's close enough, right? So it's almost like we're building a system. So this is why we need to make rules, and we need to really clarify these things. And we might come up with a better rule later on. But those are the basics. Okay. So we have tail, open and close in top third. And opposite for the downward one. And now we'll just call this, and again, if you have another name for this or your favorite candlestick name, you can use it, or whatever price thing you use, just be consistent. Hard up. Now, once we get the definitions, we want to kind of get a good feel. I want you to feel into these bars what's going on. It's supply and demand here. We want to see, at some point, this thing has a process. It starts its life here. And it runs up. And in this case, we're putting it in front of several smaller bars. And so we might even just mix this definition with a wide range bar, bigger than the last 3 bars. So that way we get something significant, right? So I want hard up, but I also want these things to be a significant supply-demand event, because that way we can use them to follow. Yeah, coil expansion, good. I keep seeing that, Gina. I keep seeing all of the stuff in here. I'm not doing this slow because we only got so much time, but keep seeing all that stuff. The first lesson where we started to write this out, I talked about all that. But in every bar, in everything, keep seeing all that, keep feeling that, right? It's expanding, and it's in process. So when this guy takes off here, until it closes, it's got the possibility to be a tail, does it not? Do you see that? It's got the possibility. So it's kind of like continue or reverse kind of a thing. And keep reaching to understand that. So imagine, this bar hasn't closed yet. It started, it's reaching up. And until it closes, it's got the possibility to be a tail here. That's its process. See, this tail starts out as a hard down. See, just by the definitions, do you guys get that process here? This tail starts out, I wish I had a way to draw it on diagram, as a hard down. And does what, Gina? Before it closes? It probes, right? And then it reaches down, finds buyers, and drives it up, and we can define that as reverse, right? So it's like a reversal all built into one. And then if I get another one over here, it's like that with the middle, the base. And so this is like, if it stops, it's continue. And this is reverse, all in one action. It's a V, it's a wash and rinse, it's all of that, all in one bar. All in one bar. Hey Nate, maybe jumping ahead, but could also be the first half of mirror bars. Yeah, let's go to that next, right? And so when this guy, say it closes, yeah, it can turn around and be a set of mirror bars. It can open here and close here. And then that would equal a tail, yes. But that is jumping a little far ahead. So let's keep with our one bar. All right, so at this point, and not only that, we can begin to think of this as, in minors and majors, we can even begin to think of this as 1/4 of a swing. Really, we could think of this as 1/4 of a swing if we wanted to. So from this point, now let's do process a little bit. All right. Now notice if this bar scouts here and here, it's an outside bar. It's got a little bit of a different feel to it. But from here, let's get into our definition of gap. Okay? So it can be a real gap, or it can be, these are also called hidden gaps, but they have the same qualities. Hey Steve, wouldn't it be 3/4 of a swing with the coil? It depends, because it could be 1/4, 1/4, 1/4, and 1/4, right? So we can say 3/4 of a minor swing. See, we can really move this stuff around. But you're starting to get it. You're starting to get it, because I do want you to see these things as swings. See, once we start jumping ahead a little bit, it starts getting a little more complicated, and this is stuff we got to get. So let's finish grabbing gap. And so when I say it's a swing or 1/4 of a swing, I'm kind of trying to pique your interest to think about it that way. We can think of it as a minor swing or a major swing, and then I want you to trip on it. Right? When I drew it, it showed 3/4. I'm not adding quarters up yet though, but I can say 1/4, 2/4, 3/4, and then 4/4, right? Boom, 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 boom. Or I can break it into minor. But good, keep thinking that way. Work it out, okay? 5 minutes ago I drew a median line. I don't know what I did 5 minutes ago, but I did. Okay. But keep thinking of it this way. Keep thinking of it that way. As a swing, and you break it up into how it would go. I could even break it down like this and say this whole bar is a major swing and half the bar is a minor swing. And so we can break it down to that fractal if we wish. But let's go with this structure, and then we'll see how many quarters we get in the end. Because it's kind of like when I do draw a median line set. And price is here. I don't know that price is going to finish out like that. Price might hold the mountain and finish out like that, and then make this the swing rather than this whole thing the swing. You get it? So I don't know while it's in process until, the process is done. All right, so let's define gap. Gap is real easy. I want to see a space between this bar and the bar after this one, the bar after the wide range bar. I want to see a space in here. See, there's a space, there's a gap. If this guy scouts all the way down like this, it's not a gap. If I'm here, it's a gap. Okay? We all good on gap? Pretty easy? So price has a lot of options as it goes into process here. So for instance, even from this point, it can stop and do something like that and give me an inside bar, right? And then it can go like this or go like this and turn into an outside bar. But right now, let's just define gap, and that's a space between the previous bar and the subsequent bar of the wide range bar. So this will be a wide range bar which is defined as bigger than the last 3 bars. And so as this guy goes into process, it has the option here to continue or reverse. So if we continued instead of reversing, you know, that's liable to change our swing dynamics. Because we can end up something like this and call this a minor and that a major. All right, so that's a gap. Now, and you need to watch price do this when it's on a mountain. You need to watch this live. That's what we're lacking here. I'm just building models. We'll go look at some markets. If price comes down, we are now building the process of a mountain. And again, price has the option to do that or to come through the mountain. Remember, the mountain's like 50% of the median line. So this is the equivalent of, say, a mountain median line wise, or how minor swing turns into a major swing if it goes through, or if it just stays this swing right here. So we're at a mountain base now. Now let me show you, as I build this, I have an interesting slide. I just got to find it, hang on. I have an interesting slide here when it comes to mountains. All right, read that for a moment. Does that make some kind of sense? So a mountain, and nature does abhor a vacuum, which, you know, has to do with gaps. So a mountain, we see price try to fill open gaps. Most traders not only expect gaps to be filled, they plan trades to take advantage. I have several gap strategies myself. The concept of mountains and valleys is partly built on this tendency, but it's more basic and a reliable tendency of price. By watching how price builds mountains and valleys, if price fills the mountain and valley or respects the baseline, it's visually easy to understand market structure. And you can also see in this diagram that this might also be, it can be part of a tail with its base here. It can be a hard up and a hard down. It can be a V. Now, this doesn't come from me. This is one of Tim's slides from an old presentation when we were doing those intense focus topics years ago. So this is from Tim, not from me. It's probably why it looks prettier than mine, huh? For those of you who are not so sure about what I'm saying all the time, you just put this one on Tim. We're talking the same language, me and Tim. Same understanding. And so you can think of a mountain as having some of the properties of a gap getting filled. We need to get this on a real feeling level. Need to study that, right, Gina? Yeah, good. So this is a great slide. So I've saved this one because I always like that one. This was, just part of price action, watching bars go up and down. Aha, right, same thing, good. Haven't thought of it that way. Yeah, Tim's real good at that. He can bend you around, think of things different ways as well. And, when I'm talking baselines here, I can be talking a median line. I can be talking a coil, base of a mountain. I can see the base of a mountain start, right? By watching price go and follow it back to what we call its point of inception, right? Its coil or whatever. So you can see it start in process. And then you can follow it in process. And it's in one bar or it's in many bars. And so rather than just try to figure out how to trade it immediately, put your attention on the process rather than the result, because you want to feel into these things, the baseline. So like a median line almost. It can do another half down there and then it would be a median line, wouldn't it? And if I went like this and like this, then I got a completed cycle with a median line. This is price. It's buyers and sellers doing their thing, but they will have extremes. They will have a center. They will have a rhythm. Nobody does anything randomly. This is money we're talking about. These guys don't do anything randomly. You better believe it. You couldn't, if you tried to draw dots on a piece of paper, you couldn't do them randomly. There would be a pattern in there. And, that's kind of what we were talking about when we were doing this series here, is that, there's patterns that we can see to understand the market structure, because, we're visual creatures. All right, so that's an interesting slide. Okay, Gina. So I want to try to get across now. And process, mountain, that's the same drawing. Now, if price, comes back through here, it's got the option. It can go either way. Now, if price comes back through here, it's the process of something else. Now, don't forget what we're doing now is, we still got swings. But if price goes back through here, we're now talking about the process of a pivot. And we're getting a little closer to the little green lines. We're now talking about the process of a pivot. And so the process of a pivot will have all of these bars and tails, stuff built into it. Now it's an outside bar. See, it's all built into it. The process of a pivot or a wash is real easy. It has steps, and we can follow them in steps. I can go. And it's real easy on a chart, because you can look at a chart, you don't have to do anything until you see the zoom someplace. Till you see a wide range bar, and then you can say, oh, what got zoomed? And you can back up, what got zoomed? And then you can say, what happens afterwards? And so now you're not in the noise. So many people are just, they're wrapping their nerves around just spending all their energy in the noise. and it wears you out. This is why I've identified things outside of the noise. Even this coil here is a swing, guys. So step one, and we're just going to call it, and it doesn't have to be a coil, but we're going to put MPL coil. It's got to be a lid of some kind, okay? Step one, it's got to be a lid of some kind. It's got to be, you know, support or resistance of some kind. It's got to be pressure building of some kind. All right. So what we're doing now is the process of this little pivot here. Step two. Zoom. Wide range bar, hard up. Expand. It can be a gap. It can be a lot of things, right? Zoom, step two. Step three. Retest MPL. Now at this point, it's not done its process finished. At this point, it's also the process of a mountain. So it can do like this. So expand, contract, continue, or reverse. It's got a choice. So for a mountain, we're at step three. So a mountain and a wash will have the same process steps up to step three. Okay. Step four, if it's going to be a pivot, zoom MPL. Again, expand. I don't want it to just inch through. I want this level to be, so I'm making the components that go in and the process that go in, you know, to this here. Step five is take out controlling sellers or controlling buyers. Now you see, I can move these steps around a little bit, right? You guys have seen me present this, you know, a few different ways, right? But that's basically it. Step one, coil. Step two, zoom. Step three, retest. Step four, expand. And somewhere over here, we'll have controlling buyers and sellers. And step five is now this is a wash and rinse for that side. Step five, price will have to come over here and prove it's taken out, and then we can say it's completed. Now this isn't going to be a full-blown wash and rinse presentation, But this is where the bulk of the action's happening. This is like the base here. So if price ever does manage to get back up here, it's a place we can consider taking action, or at least following it. Let me present this in another light. I made some slides some years ago, okay? As I was talking this over with a student, I think. And it's a pretty good visual. Okay, imagine this. Okay? I've got step one, this MPL. And in this particular case, I'm saying it's unbalanced because there's like this big foundation. Think of it like a house foundation over here. And then there's this, you know, quick run up. And so price is banging along here, little yellow box is traveling along here, okay? And so I'm saying this is unbalanced, right? This big thing here, it's going to be hard for this piece of structure to hold it. Just think of building. If you've got Legos or you're building a building, you don't want to put the 10th floor on a foundation of this, right? If it falls, it's going to fall into this. You get the idea? You get the concept? And so this is how a pivot is made. So imagine price traveling along here, right? It pops up, it's traveling along, and then the hinge, this thing, it just hinges, and like so. See? See the steps? You know, step one, step two, step three. So step one is MPL, step two is, you know, zoom, okay? Step three is retest. Step four, rezoom the MPL. But it's like a building that's just opening the door here. See? Open the door and slide, and price slides down. Come on, that's a good visual, guys. It's not bad. Maybe it looks better in my head. And then the next is, okay, then it gets picked up and carried back up. And so it's almost like this is a new foundation that needs to plant roots before it can go. And so imagine, you know, price going along the thing, and then the door opens and it drops down. And for it to be a pivot, then it picks it back up and climbs back up here. And what happens here is, you know, you close the door, and then the V becomes, you know, the new foundation in here, like the roots being planted here. So imagine the box comes down. It's okay. It's okay, Gracie. You got to watch price do it, though, especially when they open the door, and then we can see it in price. It's a zoom. Now, I drew this. So here's what it looks like. So I drew this on the CAD daily back in, like, I don't know, 2013. And we were talking this over in process. So do you see how, like, this is my foundation, and then price comes up, and this is very weak, right? You don't want to build a house on this little weak thing here. It's very weak to build. This is big, this is weak. And so it gives out, it folds down. This is a solid set of people down here. Bang, 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 bang. And then this is weak. Let's look at a couple examples of this real quick. Actually, December. Let's go back to this one and see how it turned out, because this was live. That was live when I drew this, because we were doing process, real time. So December 3rd, I think it was 2013. CAD Daily. That's just some research. Let's see if we can find that guy. There it is. So what I was saying was, this was our foundation, and this was just a very weak thing for Price to sit on. And what I was doing in the presentation was, we can follow this in process, and if this thing falls down, it's got to fall down into this guy here. So let's see how we turned out, because people were pushing. This is also how minor turns into major. You see him give, see the door open, right? There's my door opening. And closing. It never lands all the way back down in here, but not bad. You know, not bad. Never lands all the way back in. Pretty much rock and rolls from there. It creates its swing. Okay. Very similar to the mountain wash too, right? Gracie says, I sometimes have a visual of slingshot. The harder they pull back, the further. Yeah, you can have a visual of a slingshot, or you can even have a visual of, you know, you ever have any brothers or sisters where you're playing like a tug of war and you let go? So imagine if you let go, you can do that a couple times to them. Yeah, right. You can do that. You can do that. You can fool them twice, right? You can pretend to let go, and then as soon as they're leaning the other way, you push them back over. So this is like getting people to lean this way by pushing them. And so now they're, you know, they're leaning and they're starting to tip over. And then you help them catch their balance and you push the other way, except you give it a little help this time. And then they go flying, right? So little brothers and sisters are good for practice. So yeah, pro, press, try, wash, go. Yeah, you can think of it all like that, you know. There was another one that I wanted to talk over with you guys. Had the same thing. See, this is all heavy-duty foundation here, then opens the door. But this is heavy-duty foundation, and this is very minimal, right? See, it's real easy for this thing to bust down and land into here. Open the door into its main foundation. And, you know, median lines are going to do their thing, okay? Median line. And this is a good, you know, mountain wash, right? Remember the mountain wash? See the try? And then open the door, and then close the door. Now, you don't always get a retest here. Remember the steps. Step 1, MPL, bang, bang, bang. Okay? Just remember your steps as you go through it. Step 2, zoom. Step 3, retest. Step 3, see the zoom? Zoom. And then, there's a probability of it coming back to test like so. Pro, press, try. Same thing. Yeah, same thing. So I'm showing you this for several reasons. And it doesn't matter what time frame, what instrument. Okay, we've done this one. Let's go back to 1933 Dow. See it. Step 1. Step 2. Process. Step 3, zoom back through. Retest and zoom all in one bar. Now remember, this has the option to just be a valley here and go. It's got that option. And there is a tendency for this thing to retest. It doesn't have to. It's not part of the process. So it's this, and look at the price action, guys. You can see it. You can see it. It's dull, 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 dull. Then they start pressing them out. Da, 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 da. And then bang. That's same thing. Pulling the slingshot back. Off balance. It's what makes. If I went swing and I told you that there is a pivot on each side, and that pivot will have components, and that pivot will have process. See, same thing. Multi-pivot. It doesn't have to be a coil. It can be a multi-pivot line of some length if you want. But you can see the zoom and then the zoom, right? Quick retest. Zoom and the zoom. Quick retest. This short is the equivalent of this long in this case. And all I'm doing is taking apart a swing, and it doesn't matter what time frame or what instrument. It doesn't even matter if it's a market. Somebody sent me a slide of a brainwave that got washed and rinsed. It can be any data. I have that. Hang on. I have that. See that? That's a brainwave. See that? Somebody washed their own brain. See, step 1, step 2, step 3. Right? That's brainwaves. Somebody washed and rinsed themselves there. Feel like your brain gets washed and rinsed all the time? Yeah, just, we understand the point though, is that it's movement. It's the nature of movement, okay? It's the nature of movement. It's the nature of everything in life. We'll have opposites and a center. We'll have extreme. And anything taken to extreme turns into its opposite. Birth, growth, death, birth, growth, so on and so forth. Okay? So it really doesn't matter. And you can see the door open here. Now, before you go salivating for trades and such, I want to just talk about one little thing here, because I want you to stay focused on the process. The meaning of appropriate is whatever gets you what you're after, your goal. An appropriate action is whatever gets you what you're after, okay? Unfortunately, people think that an action can be appropriate all by itself. A technique, a pattern can be appropriate. A single pattern can be appropriate to everything. It's always advantageous. So as you're watching this wash and rinse, don't think that this single pattern can be appropriate and slapped on anywhere, because it's not. Put your attention on the process, not the result. What's appropriate is always, just like these lines, what's appropriate is always relative to what's going on. Relationship again. And see if you can wrap your mind around this. Because people think that one Head and Shoulders, one wash and rinse, one 3 drives is a advantageous pattern that can be applied anywhere. And when I'm saying that, appropriate is what gets you what you're after. And appropriate and advantageous only exists as a temporary relationship. No matter how impressive the structure is or the pattern. What's appropriate is always temporary because things are moving. So 1 minute doing something particular with that structure is appropriate, and the next minute it might not be. You always have to relate it to the changing environment. Hey Ed, you saw balance in the brain there, huh? Can be a precursor to a seizure, maybe, huh? I don't know. We have to use you as a guinea pig one day, map yours out and see what kind of structures we got in there. You can map out your equity curve too, guys. You know, you can wash and rinse yourself. Say, all right, it's been a bad month. Wash and rinse. It's time to go up. You can put median lines on it. You know, it's a very interesting thing that we're doing here. It's very interesting. Very interesting thing that we're doing. All right, moving on. Now, this is a swing, and these are swings, correct? A higher high confirms a low. Here, let's give us a little more room with this. How much go this can be? Okay. Epiletiforms are called a spike, and dome formations, they sound like traders. Can't even pronounce that, huh? All right. Higher high, higher low. Now, we're getting to the green lines a little bit here. Now let's say at this point, I get a bar that does this. So I've now broken one of my lows, correct? Higher high, higher low, higher high, higher low, higher high, higher low. Do you see where I'm going with this in process? I've also got major swing, and I'll call this minor swing. That turns into a major. So you kind of remember our double drop, how a major, how minors carve themselves out, and then we get two minors, 50% and 50%. And these are swings. So this is swing, 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 and we'll call this minor swing. And minor into major. They're all still swings. And this turns into a major. And this is bar level. We're still finding our way here and fishing our way. We're going to have to bring this into a simple presentation eventually. All right, so process. Swing, and let's introduce the concept also of last swing broke, or LSB, as it's been named by some of you guys. So this would be the last swing broke, because it broke right there. Do you see the process of this? It's of this. Do you see the process of a wash and rinse happening here? Can you chunk that out? Can you chunk the steps out? Of course, this is an upward wash and rinse. If I drew it like this, it's opposite. It's downward, and this is also step 1, step 2, step 3, step 4. All right. What is this orange line here? What step? If you're at home, play along. I want you to get this. It's actually step 1. Step 1. Yeah, good, Davey, MPL. And then this next bar, since it's a bar level, is going to have to combine, right? It's going to have to actually start to combine some things, but it does at this point it's zooming. Do you see it? It's zooming. Step 2. Step 2. It's zooming the MPL. Told you, we're getting to the little green lines here. We're getting closer. All right. Now, if price then does this, I've got 3, 4, and 5 all cranked up in here. See? Minor and the major. Yeah, Phil, bar level wash, to be specific, right? Major level wash. Minor level wash. And there'll be one on both sides. And bar level wash. These are swings. I can also say that maybe the first bar is a minor swing and 2 bars is a major swing. Same with this, okay? I can go 2 swings back and go 2 swings back. 50, 50, 50, 50 equals a major, 100. Now, I also lovingly refer to this as a bait, because what happens is, price dives back down, scares the hell out of people and rips their heads off. It's this, okay? It's this. Price dives back down. And so a bait is a very good way, a very excellent way for you to follow the market. And you can watch it happen in process. Is it going to be a bait or what? And so I call these baits, because usually they happen fast. Price dives back down. And so I can then, and they're a pivot. 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 This will help as you watch markets in real time. And so what it's telling me is they made some sort of open the door here, some sort of effort down, and then what happens next ends up here. So that's telling me something about what they are doing. And don't forget, while you're trading, it's always about them. It's never about you. It's never about your technique. It's never about your stuff. It's never about your emotional reactions. You cannot be skillful paying attention to you. I know it comes automatically, all right? We haven't talked enough about that. But I'm telling you, what has to get done to be skillful is your actions must be designed by them. And so this is an excellent way to clean up your perceptions of what price is doing on a bar level, on a minor level, on a major level. We haven't got to relationships yet. And when price starts to say, I don't know, do something like this, right? It's now carving out something a little bit bigger, and the swings are now going down. See? Swings are now going down, and I can say, see, there's no more baits, right? So I'm following the last bait, the last wash, the last pivot. See, there's no, it tries right here. It's going through. See, there's no more baits to the downside. I have now this as a marker, which can turn into a mountain. This is where often you'll get the, the try. And so if we draw our little green lines like so, on the last bait or on the last tail, we started this a week or two ago just saying, put it on the tail. But now you understand why I put it on the tail? This is why I put it on the tail. Because it's the last place there was effort, a punch, and then price made a new high. It was the last one. They were marching, they were baiting people, they were running up. Hey Wes, can you add the label steps to the bar level diagram? Yeah, kind of hard to draw in, but step 1 is just the bottom swing of the last bar here. Step 2, and you can draw it out. Step 2 is to zoom it. Step 3, you might say, is the price coming back to close above it, at least retesting it. And then step 4 is, zooming back through. And it can happen all in one bar. All in one bar here. All in one shot. Step 2, 3, 4. All in one shot. See? You get it, Wes? Step 1 is going to be here. Step 2, 3, and 4 can happen before the bar is even done. That's what leaves the tail. It's the reversal. That this tail, it's like a V back to its base here. And then back through the base. Back through the base. And then step 5, taking out its previous high. Does that make some kind of sense? When I do this in slides, I'll be able to, walk it one by one and be clear. This is, it's kind of dirty. I told you we're figuring it out. And so, just like a V, it scouts, just like the NASDAQ V during the election we did. It scouts, right? Just like that NASDAQ V. Where was it? Just like any of them. Right? Thing scouts. Leaves one big thing there. It's all V in here. It's all V in here. It scouts. This was all in one bar. Look at that tail. See? All in one bar. Step 1. Bang, bang, bang. 2, 3, 4. Retest the base. Which came from, over here someplace. But we looked at this on a tick chart, and we saw the nice V the whole thing made. You have to go back to that presentation. All right. Now, if price then comes through, I have what I call a swap. This is a swap. Prices swap flow. And then what you're looking for also is the step 1. Now we're looking for it on the other side. And so now the washes are pointing the other way. And we call that a swap. The baits have swapped. The flow has swapped. And it's the same thing as if this swing, this major swing, gets busted. See, if I break that, it's the same as that swap. It's the same thing. Except here, it's swapped on a much bigger level, on a structure level. And so for price to break down through here is the same for price to break down through here, because it's broken down through its last. This is a major bait, okay? Major pivot, major bait. Starting to come together? So, you know, we might draw a line like that. And see price swaps. And so on a bar level, we can watch these baits. We can draw a line on these baits even. There's a lot of things we can do. We can draw a line on these baits. And a line on those baits, you see, can actually turn into a median line set. Minor into major. So now we're, got a lot of things going on here. This also flows into continual reverse. All sorts of things. So we're doing minor and major, bar level, process. There's a lot going on here. Now, you understand how and why I draw these lines off of tails, right? And from this model, you can understand how and why I might draw my green lines here, because now it's like an outside bar. See? Or, just to make it cleaner, I'll go like this. So we'll clean it up over here, okay? So in this case, I have an outside bar. And so my outside bar, my green lines, will be like a median line. It will be like so. Now I'm getting back to answering that original question about why or where or how to place those little green lines. See? He was looking for a consistent way to do it. So here you see I have a tail. So on the tail, I'm going to just grab the tail. Here you see I have an outside bar. So you see I'm grabbing the middle of whatever, the inside part. See that? Hey, Steve. A bait's ability to have multiple levels, bar bait, minor bait, major bait, it starts as a bar bait. Yeah, it starts, right? It has to grow. Good. Yeah, it has to grow. And so that's part of process too, right? It has to grow from something. So it has to, so you can watch the process of a bar level start to do a wash and rinse and a swap or something, and that can turn into a minor, and that can turn into a major, or not, right? It's still got to go through all of those processes. And the more you understand this, and you're not going to be able to wrap your mind around it intellectually. This is why we're learning the alphabet. If you're trying to just figure out the system intellectually, you're not going to have any luck. But as you learn the alphabet here, and you watch it real time, it all becomes like feeling sense, and you can put it together with some experience rather quickly. It will take practice. It will take you fishing on charts and identifying these things for yourself. It's that, or go back to looking for a system. And so I found that putting your attention on process rather than result makes you more skillful. Okay. I put them on the tails. When it comes to an outside bar, I put them here. And I have one more. So basically what I'm doing, the little green lines, they represent a base that got busted or didn't get busted. So the next thing I want to show, what do you do when you have a gap? A gap is the same thing as a hidden gap. It's the same thing. It's no different. See here? I have a gap. Notice I'm drawing from the base of that gap, or in the base of that gap somewhere. We're going to get to this gap next, right? So what do you do when you have a gap? That's a good question. So we have the tail, we have the outside bar, right? So the tail is going to be, we're basically going to draw the green lines here. Now, if we have a gap, let's think about it. You're going to have to remember process. So let's say we have this, 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 this. Okay, great. And then we have our gap. Now remember, same thing going on here is going on here. See? So there's basically three ways to draw the little green lines. Do you see how you're going to draw it off the gap now? You do, Steve asked how you do it on a multiple bar gap. How would you're going to draw it the same way. Even a multiple bar gap, let's say we have 3 hard ups, okay? Let's say this thing just, goes like this, and like this, and we call it a gap, okay? We're going to do it the same way as any normal gap. Doesn't matter if I have a multiple bar gap or not. We're going to draw the green lines the same way as the outside bar. We're going to draw it off the base. Remember the basic rule I gave you, and that was just to get you started, was to draw in the bottom third of the gap. So let's call that our gap. So you see the bottom third of the gap, outside bar, see how it's the same? So these are the 3 ways I'm drawing these lines. And it all has to do with the process of a swing and the process of a pivot. and I'm mostly drawing the green lines on bar level structures. Capiche? I can draw the green lines on swing level structures, but that's another lesson. So here, see, tail, I'm drawing it on bar level. Outside bar, same thing. It's pretty much bar level. Tail, bar level. This would be a gap and a base here. Bar level. See this one here? That's a gap. And so it happens to work with this swap, right? Because a lot of times this swap gets rezoomed and creates a gap here. And so this would be the mountain of the gap here. And that's why I draw them where I draw them, so I can follow price on a bar level, and they will have a process, and they will have certain characteristics. They will have certain characteristics. For instance, these turns down here that create bigger wash and rinse, they will have certain characteristics. Let me take a picture of at least what we did here. And see, when I drew this presentation up, we were just concerning ourselves with gaps of a certain size. And I said block off the upper portion if it's down, block off the bottom if it's up, and eliminate everything else and follow price. And then I also challenged you to see the sameness in these two structures. And they're very much like this, making a pivot. Now remember, just because you're making a pivot doesn't mean, oh, we're rocking and rolling to new high, major reversal, or any of that stuff. Just means you're making a pivot, right? So look at and this New Zealand brings all of our lessons together. The modified shift lesson at a turn that we talked about, how it's projecting the range, right? Do you see it? Right? If I drew it A, B, C, the bars, the baits, see that in here. And then I'll go over that Friday. But that's pretty much wrapped up how and why I draw the little green lines where I draw the little green lines. The basic instruction is on a tail, you just grab the tail. You grab the tail. Starts over here at a coil and gaps, you grab the coil, the bottom third if it's going up. Because remember, if it's zooming, it's liable to be zooming something. And then the outside bar. And so we covered a lot of ground rather quickly to get to this. But this is something you need, and don't forget minor, major, 50%, all of that stuff, right? See, the two swings, the minors turning into majors. Watch when I do this, and we'll end here. Gap, right? Expand. Where does it expand from? Well, it we can use retests and stuff to fine-tune things. So it's basically expanding from here. And now we have expansion, and we're starting to contract. See that? We have expansion, we have contraction, expansion, contraction. Now what's price's choices? Right? Reverse or continue. This one continues. I can also, with this understanding, I'm pointing this last thing out when it comes to gaps that continue. I can call this one half, and I can call this one half. I can call this a minor swing. I can call this a minor swing. And I can call the whole thing a major swing. Make sense? Minor gap equals major. Makes sense, right, Gracie? And so it's just like when we were drawing this, minor, and price busted. It's just like if I was drawing Bates. And price broke a swing here. Same thing. Now, in this case, price has the opportunity to continue making a larger swing, or it can even, you know what, make a reversal, right? In this case, if price comes back up here, it can roll right back into its major. And so you've heard Tim use things like two swings back. This is part of it. You heard Tim manage, when he's managing trades, he's managing two swings back. Well, this is part of that understanding, right? So as price rolls up into these significant gaps, see there's no gaps here, there's a gap here. And again, you know, we can just do it with the green lines. Same thing here, green lines, right? You can see it roll up through the minor into the major, up through the minor into the major, up through the minor into the major. And we can see who's winning. I think I'll leave it there. So, median line, I'm talking median lines, 50%, the median. But I'm also talking process, because if you think you're just going to grab a median line and look for frequency, it'll work sometimes, but you're lacking understanding, you know, or look for a certain setup. It'll work sometimes, but if you're lacking understanding, you know, forget about it. You're done. It won't work. You beat your head against the wall. Hey, Gracie. Very nice in-depth study of price action. That was just the surface, Gracie. It's just how I can get it all together and explain it. It was just the surface, right? It was hard enough, wasn't it? It's your job now to get this on another level, to go and you practice it. And let it soak in, okay? Just let it soak in. It'll come. It's flowing, yeah. It's flowing. It's very interesting, right? It's flowing. And so notice that whenever I draw something, whether it's a median line or anything else, I'm very precise. I didn't just hunt for back-tested patterns and say, oh, this has got a probability. I didn't just hunt for statistics. I'm understanding that price is not random. The median lines describe that, non-random. I'm understanding that price is not random, and I'm following. Again, don't just try to hammer this out into setups. It's a way to follow the flow of price. Then you can get on board. I'll give you one little thing to do when it comes to follow the flow of price. Somebody sent me some nice charts of oil, and I challenged him to do something. He sent me, he was looking at the outside bar kind of thing up here. He sent me some very nice charts. Put some good work into it. And since he engaged me, I challenged him to see a little bit more. I challenged him to see the turn here. And why? Well, all I'm asking you to do at this point is see the major and minor swings, all right? See the major and minor swings, and then maybe see, you know, the outside bar thing going on up here, maybe even down here. But first start out with the major and minor swings, and then I'll go over it. And it's not to say, oh, you just draw this and get long or short. No, it's to say, when you can map the market, you can follow the flow, as Wes says, follow the flow of price, right? As Phil says, follow the flow. It's flowing. And so by mapping out swings and some of these things, we can then follow the flow of where buyers and sellers are wrestling and who wins. That's why I do it. Hey Rita, could you at some point describe what you mean a little more in depth by price is not random? Nothing's random. You're not random, right? Price is done by people. People are not random. There's an agenda. There's people trying to do things. There's supply and demand. What they're doing isn't random. You're not random. Nothing you do is random. This is a function of mind. You mean we have form? I mean, there's nothing that you do is random. You can try and put little dots randomly on a chart. This isn't more of an in-depth discussion. And it won't be random. It'll have your signature all over it. Everything has an opposite. Everything in form, right? We can talk a little more about that, but there's nothing random in price. Let's just put it on a money level. Think about these guys. They're running, you know, hundreds of billions or trillions of dollars. There's a lot of money at stake. All through history, when there's money at stake, you think anything was left to random? When it comes to them keeping their money and making more? There's a saying, it's a golden rule. He who has the gold makes the rule. There's even been times in our history where the stock market rules have changed, or the gold rules have changed to benefit one person or another. Just look at politics. Nothing random there. Got the best politicians that can be paid for. There's nothing random there. Throughout history, energy companies write our energy policy. I mean, come on. Nothing random, right? It goes all the way back. when it comes to money. And besides that, people behave in very non-random ways. There's nothing random. I have to open up a discussion and go back to, maybe we could start with Einstein, where he says, what is that? God doesn't roll the dice. There's nothing random, something like that. Maybe we'll have to start that discussion and we can do a little bit of presentation on that. But just think of your own mind. Right? Nothing random going on there. Everything you do is related to something in memory, is it not? Everything you encounter and figure out what to do, is you're going to relate that backwards to something you've encountered. Nothing random there. It's got your prints all over it. You understand that? Everything you encounter and how you decide to relate to that is going to, your mind's going to flash back, make some associations. Say, oh, I remember that, and I should do this when this happens. It's not random. If you can be random, you're onto something. It's a choice, not chance, that determines your destiny. Yeah, it's always a choice, always. But we can have a big discussion on that at some point. Just look into it, right? Look into it. You'll have to go see what I was saying, Rita. God doesn't play dice with the universe. That was it. Thank you, Ed. But there's nothing random in price. Nothing. There's no randomness there. So this would be a good one that maybe I get Tim to work on with me. Build a whole thing on it. There are patterns, right? Why do you think we keep seeing the same patterns over and over? We just need to isolate them and form them up. Nothing random going on. But good subject though, Rita. We'll have to tackle that another time. All right. So look at your oil. If you got tick charts. And we'll just wrap it up there. Sound good? Thank you, Mike. Thanks, guys, for showing up. Your step after I've drawn the models is to go and follow it in real time. Watch it happening, and then it soaks into your bones. You know, watch it happening. Follow it in real time. Right? Bang, boom, bang. You know, follow it in real time. On a bar level, on a structure level. Follow, okay, you know, follow it in real time. What's the thing here? You know, you can follow all this in real time. What's it do when it gets here? It's a flow of price. You can follow. These are baits in here. See, you know, when one set of baits gives out, see how it creates a, see, bait, bait. More to get. All right. Anyways, see you guys on Friday. Appreciate it. Yeah, okay. I'll let you say it. We'll talk randomness another time. All right. So you guys take care, and we'll see you on Friday.